Hello and welcome to the Paris Fintech Forum Communities Programme. I'm Elliot Gotkin. I'm a journalist and with Laurent Nisri, co-host of this exclusive video interview series produced with the support of Solaris Bank, Rise and BPI France. Now, in the investment research space, most household names have been around for decades or even centuries. So it's even more impressive that Morningstar, founded in 1984, has gone from being a startup based in a company founder's apartment to a global leader with more than $1 billion in revenue. Morningstar's CEO is Kunal Kapoor, who joins me now. Great to see you, Kunal.
Elliot, thanks for having me.
So I think many people in the investment space or who have ever invested have probably heard of Morningstar, but perhaps you can give us some more details to tell us exactly what the company does.
Yeah, absolutely. So Morningstar was founded, as you said, in our founder Joe Mansueto's apartment here in Chicago. And, we've had a very strong mission of empowering investor success. And at the core of that, Elliot, is our belief in independence and transparency and doing the right thing for investors. And so when you talk about the fact that Morningstar has persevered and grown over time, the reality is that in the past 30, 35 years, investors around the world have, I think, succeeded more. They've had more things break their way. And I would like to say that, Morningstar has been partly a very significant advocate for investors. And so as those investors have succeeded, so too has Morningstar. I'd also just say that we've always had a very strong grounding in technology, data, research, and design. And these things have underpinned many of the solutions and ways we've come to market. Obviously, the word fintech has become super popular these days. Even this is called a Paris Fintech Forum. But Morningstar is one of the original fintechs. We use technology to become what we are today. And even if you look at Morningstar today, it very much is driven by our ability to use technology as a means to share our data, research, and insights. And today, Morningstar is not just covering the public markets, but through our acquisition of PitchBook, we cover the private markets as well. And we're really focused today, too, on just personalizing the investment experience. And so we own Sustainalytics, which is the leader in the ESG space. And we think this is a huge opportunity where you can marry data with technology to deliver a low-cost, personalized investing solution to many people who, up to this point, didn't think of themselves as investors, but now are because they realize that their investments can actually make a difference
Right.
in things.
And so many more people presumably have become investors over the last 12 to 18 months because, of course, with nowhere to spend their money, a lot of people use the pandemic as an opportunity to invest, perhaps partly out of boredom. But tell me how that impacted Morningstar.
Yeah, so you're exactly right. If you had told me at the onset of the pandemic that more people are going to become investors, I would have probably said that's very unlikely. But here we are, and we've seen surges in traffic on Morningstar.com. And, on the one hand, of course, some of the things you read about in the headlines, GameStop, Dogecoin, those kinds of things are certainly seeing surges on Morningstar.com. But we're seeing things such as like learning to invest, opening a retirement account. Those types of searches are also surging. And so it's notable that we've seen a nearly 50% increase in 18 to 24-year-olds on our website and a nearly 20% increase in women on our website. And so that tells me that the face of the investor is changing. And while many in the financial community have sort of shrugged and said, well, these are part-time investors, they're going to be gone, I think that's not the case. I think people have been hooked and costs have come down and they're interested and they're using ESG to personalize things. And so I think it's our job in the financial services industry to make sure that longer term, all these folks have great outcomes. Who cares how they started as investors? The thing is that we can help them be successful investors. I think it's a great thing overall that people are taking charge of their finances, and it's our job to help them regardless of how they got interested in it.
And now, unless LinkedIn is missing some details, I think you've only ever been employed by Morningstar, or also one of the companies that was bought by Morningstar, working your way up from a data analyst to the top job. Did you always plan on being a kind of a one company man? I guess
I
there's still time to
started,
change, but
yeah, no, you're right. I started right out of college, a week after college. I started at Morningstar. And yeah, I did start as a data analyst. It was a small company those days, 200 to 250 people. I think we had like 30-ish million in revenue. And so for me, being here is I kind of wake up excited about our mission every day. We're empowering investor success. And, nothing gives me more joy than when I'm out with friends or something and somebody will say, "Oh, you work at Morningstar. I just want to thank you because you helped me with a retirement account or funding my kids' college or helping me buy a house." And like those are the moments we all want to have. And Morningstar provides plenty of those moments because of the way we run our business. And so it's been easy. But having said that, the other part of it, obviously, from a professional standpoint, is you want growth. And because Morningstar has grown and had so many lives in the 25 years that I've been here, I don't feel like I've come into the same workplace every day. And we've grown, we've stretched into areas that I wouldn't even have imagined 20 years ago when I started, and we're using technology in new ways. And so it's kind of fun. And lately, one of the things that I get a lot of interest in is we work with a lot of small fintech firms whose solutions we're powering. And so you get to collaborate and work with all kinds of interesting firms that are using our data and our ratings and our research to deliver solutions. And it's kind of fun to be part of that ecosystem because, as we talked about earlier, investors come in many shapes and sizes. And our job here in the industry is to make sure that we're serving them and helping them get to the outcomes that they're hoping for.
Right. And you yourself were born, I think, and raised in India. Tell me a bit about that. I guess it wasn't kind of predestined that you were going to end up as CEO of a US financial services company like Morningstar. So tell me about what things were like when you were growing up.
Yeah, I mean, I grew up in India, as you said. I went to boarding school at a very young age. In India, a number of the good schools are boarding schools, and so I went to boarding school when I was 5. So I've been pretty independent and kind of done things my own way for a long time. And when it came time to go to college, I decided to come to the U.S. And Elliot, I wish I could say that it was all predestined and well thought out. But when you're 18, you're not necessarily thinking about all those things. And I have to say that there's a lot of luck involved in terms of where you land as a job and that's the right fit. And so there's an element of that. And then there's an element of just, being dedicated to the firm we have and the investors we're serving and really enjoying doing that and kind of growing with the firm. So, yeah, I can't say that there's a predestined plan or anything like that. And just as well, because I probably would have messed it up if I had one.
And I mean, you mentioned ESG and kind of investors increasingly becoming concerned about sustainability, climate change, and the environment. I think you personally are also a trustee of the Nature Conservancy in Illinois. What prompted you to join? Because obviously, I guess something that's very important to you personally is now also something that is becoming important to customers of Morningstar.
Exactly. I mean, I actually, going back to high school, had a real interest in environmental science, and in college, I did a degree in environmental policy. And underpinning that was this notion that economics and environmental policy don't have to diverge, that you can have market-based solutions to solving some of our more thorny issues that exist today. And fundamentally, with ESG and the E in particular, I think that you're asking about, we're trying to bring that lens to how people think about investing. And I think there's no doubt, Elliot, that right now, climate in particular is one of the most important things that people are looking at and trying to think about from the perspective of their portfolio. What are the impacts? And if you just look in Europe and you look at all the utilities in Europe that have started to go, let's say, towards making decisions that favor renewable energy, green energy, their market multiples indicate that investors agree too that is the better direction of travel than a traditional utility, which trades at a much lower multiple. And so what's exciting to me is that this is a great way for investors to start engaging in the market. And to the extent that we want to move to a low carbon economy, that we want to take care of the environment, there are actual market-based solutions that are going to lead the way. And I think the examples I used for just a moment earlier in Europe, where you have the utilities trading at higher market valuations if they've switched to green energy, is an example of where capital is going to flow. And I think that's a good thing, and we want to enable investors' ability to take advantage of that. So if you want to set up a portfolio because you believe in 15 years we are going to transition to a green economy, we want to make sure that we give you the tools to do that. And so we're building indexes, ratings that don't necessarily penalize firms for what they're doing, but they potentially point investors to the firms that are actually going to benefit from a transition to a green economy, to a carbon neutral world. And so those are things that we're very focused on.
Right. I was reading one commentator talking about how also if you want to invest sustainably, you can also go short. You can effectively bet against companies that are damaging the environment as well. Like that's another way of going about things. But Kunal, don't go away because we are going to take a very quick break, after which we're going to continue our conversation with Morningstar CEO Kunal Kapoor. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. And now, Kunal, I've got a few more questions for you, so let's talk about the financial system and investment in general. Of course, whether it's the stock market or crypto assets or unlisted fintechs, valuations are pretty punchy across the board. What's the best approach for investors?
Well, I think the best approach for investors is to remember that you're not in a sprint and that you're running a marathon when it comes to investing. I am a big fan of the notion of behavioral economics, and fundamental to that is the idea that our emotions sometimes tend to get the better of us as investors, and so we have to fight the instincts that kind of come up in the short run. And I think that's true of investing. Not many people want to run towards things when they look worse. We all want to chase them when they look better. And the irony is, the reverse is true in many other parts of our lives, Elliot, where if you're, say, going to buy a coat and suddenly tomorrow the coat's on sale and you get it 30% off, you're more likely to buy it than you were the previous day. With investments, if something is down 30% for whatever reason over a short period of time, most investors tend to be less likely to buy it, even if the long-term prospects of that investment are maybe not as impaired as the market might suggest in the short run. And this was true with the pandemic, right? In March of 2020, the markets were falling so significantly. And that was the time to be buying and making investments. And yet most people were doing the opposite. And today, you're right, valuations are not cheap. And yet you have a lot of money trying to chase oftentimes similar ideas and very high multiples. And so it seems to me that while we're not in sort of a scenario like we were in 2002, 2003, where you had companies that really had no business models getting massive valuations, we are in a situation today where, if nothing else, returns in the future are likely to be more muted. And so as investors, I think the key is to be aware of that and be mindful in your planning, and particularly in fixed income. I think returns in fixed income are not going to be good for an extended period. After all, interest rates can only become more negative if you're going to want them to generate good returns at this point, and they're not going to keep going and getting further down there. I will say that there is a bit of a dichotomy between the U.S. and the rest of the world. And at least from our vantage point, it appears that non-U.S. has lower valuations. EMEA in particular, I think the UK as well, looking a little bit cheaper if you look at what our analysts are seeing. And certainly emerging markets have taken a bit of a beating as well this year relative to developed markets in the US in particular. And so I think if you're looking to position your portfolio for the next 3-5 years, maybe reallocating a little bit to get back to the allocation you might have had is not a bad idea. And making sure that non-US assets are appropriately represented is a good idea.
Kunal, we just got 1 minute left, so I'll just ask you for a brief answer to this one, because we often talk about diversity in the finance space. Are financial institutions and fintechs doing a better job of it than they were, do you think? And if they're not yet where they should be, what more needs to be done?
Yeah, I think awareness of it is increasing, but obviously we have to put action behind words. And I think there's a lot of good intent, a lot of good moves have been made. But this is a long process. And so I think folks need to commit, and we need to start by making sure more people are brought into the industry at an early age, whether it's more women, whether it's more folks who traditionally would not have been a part of the industry. And we also need to serve and educate groups that were not necessarily targets of the industry in the past. And so I think directionally we're headed in a good place, but there's a lot of work to do. And firms like Morningstar can help illuminate that path. For example, we're now starting to publish diversity data at asset managers. And so that's a tool that people can use to make decisions about where they're sending money, just as they might make a decision about an environmental goal. So this is the S in the ESG, if you will. And so there's going to be more and more meaningful tools like that will come forward.
Great. Well, we are out of time. I appreciate your giving me a brief answer to that last one.
Yeah, thank you.
I just want to thank Morningstar CEO Kunal Kapoor for joining me for this fascinating conversation.
Thank you, Elliot.
Now, I'll be back again next week with another big name from the world of finance and technology. We do hope you'll join us again then. In the meantime, you can keep up to date with all the exclusive interviews and content from the Paris Fintech Forum Communities Programme via www.parisfintechforum.com. Hope to see you next time. Bye-bye.